finally, after I think you and I have been whining for 2 years about the 1 to 200,000 foot range,
Yeah.
we've seen a reduction for the first time in a couple of years from about 10.1% to 9.4%. So the vacancy finally is coming down in the 1 to 200,000 foot range.
Yep.
Great activity in Q4.
Yeah, it went from 10.8 to 9.9.
10.8 to 9.9. Okay.
Yeah.
Okay.
We're under
Great.
10%.
Yes. Beautiful.
Welcome to our Industrial Advisors podcast. We have Bill Condon and Matt McGregor here, and we are doing our fourth quarter and 2024 review. Interesting year. We're going to start with 3 facts and an opinion. The first fact that we want to discuss is investment momentum is improving.
Big time.
Big time. So you look at 2023 numbers, and we were at roughly 500 million, and we did over $1 billion in 2024.
1.1 and a half.
1.15.
Yes.
Yeah.
Yeah. So huge numbers.
So more than doubled volume, which 23 was a slow year, and 24 is getting back to be on track with some good years that we've had prior. There's also, in the fourth quarter, we just started hearing from a lot more people, real buyers. You know, throughout the year, we heard from more people. Some were just poking around, but there's real momentum in that investment side again, which I think will make 25 even a better year than 24. So we're going in the right direction.
Yes. In addition to the investors coming back, although slowly, right?
Yeah, they're coming back. Yeah.
The numbers jumped up too considerably because of the user sales, which was the biggest user sale year since 2007 and 8. So big user sales, although, you know, you and I bet throughout the year, but the investors came back and totally won by dollar volume. But I think it was 58 total transactions, and just under half of those were users. So investors led both by volume and obviously dollar volume, but man, the users were out there.
Yeah, and it was great to see. I mean, they've been on the sidelines for so long. Pricing got back to a point where they could compete again, and they jumped all over it. You know, the other thing on the investment side, while volume is up, you know, there are, when you bring a deal out to market standpoint, we are not seeing the 10 to 15 offers that we saw back in you know, a few years ago during the pandemic. We're getting, you know, 3 to 5 good offers, but not the 10 to 15.
And you're working on those offers.
Yes.
Right?
Yes.
When you mentioned that, you know, 10 or 15, you know, call it average 12 in the really good market, right? Those were guaranteed offers.
Yeah.
Right? 7 of them were valid and close. And then a few of them were just thrown in for whatever reason. Now you're coaching in those handful of offers. Right?
Yeah. You're working it.
Yeah.
And, but there are at least a few buyers at the table that are legit.
There's not one.
Yeah.
Yes.
Yeah, exactly.
It's a buying pool again.
Yeah. And I think
right?
that number's going to continue to increase as we have some more stability in the marketplace.
Yes.
So let's talk number 2. Our second fact is development is adjusting to the market, right? So nearly 5 million of the previously spec development has been moved to being delayed, kind of back burner, right? So there's 5 million feet of product that was going to go that is saying, hey, we're going to hold off for now.
And we'll go through that number in detail in a few minutes. But so we've got in 2025, you've got 3.5 million already hammers going. It's under construction. Looking like a 5.5 to start and finish construction within 2025. So 3.5 now, 5.5 by the end of 25 will have been completed. What you're mentioning, I believe, is starts that were developers said we're going spec and are not.
Yeah.
And we'll dive into that number. It's about 5 million feet, but you and I talked about it. We don't believe all of that ever would have been spec.
That's right. Not all of it.
Yeah.
Anyway.
But to your point, if you've got 5.5 delivered, that's right sizing to the market, right? Because a couple of years ago, we had almost 11 million feet in 1 year, right? So the developers are reacting, I think, timely to the market.
The third one is, vacancy rate is going up
slightly
with the square footage. So as your square footage jumps up into the next category, your vacancy rate climbs as you get bigger.
The percentage is higher.
Correct. And we'll go into the details on that here in a minute.
Yes.
Yeah.
With the one positive caveat, finally, after I think you and I have been whining for 2 years about the 1 to 200,000 foot range,
Yeah.
we've seen a reduction for the first time in a couple of years from about 10.1% to 9.4%. So the vacancy finally is coming down in the 1 to 200,000 foot range.
Yep.
Great activity in Q4.
Yeah. It went from 10.8 to 9.9.
10.8 to 9.9. Okay.
Yeah. Yeah.
Okay.
We're under
Great.
10%.
Yes. Beautiful.
There we go. So those are the three facts. An opinion, while the investment activity has gotten better, it's still a kind of a dogfight out there for landlords to go get tenants.
For everything.
Yeah.
Right. But to your point, yeah, it's going to be a dogfight.
Yeah. And so for the first quarter, maybe first half of the year, landlords are still going to need to kind of roll up their sleeves and get creative on how we need to go capture deals. And with the amount of inventory that's out there, you got to find ways to be strategic and go get deals done.
In every size range.
Yes.
In every size range, I think brokers, we made this note into Q3 last year that our prediction was 2025, we're going to see some changes on the listing side, right?
Yeah.
The brokers are going to have to go out and create deals. They're going to have to cold call. They're going to have to really understand the competitive sets. They're going to have to be advising like no other time, right?
Yeah.
Because you don't have a shot at 5 deals for a vacancy, right?
Yeah.
You're going to find the one, right?
Yeah.
And so it's going to be a struggle for, to your point, first 2 quarters. I think 2025 is going to be a fine year, but everybody is going to have to work to earn their money.
Yeah. Yeah.
Right?
We just did something on creative on a listing to where we were able to understand we weren't in first position. We were in a backup position, and then we understood a power need, figured out a solution.
That's right.
All of a sudden, we're going to get the deal.
Yeah. But 2 years ago, you wouldn't have cared about the power need, right?
You had 3 other tenants.
Exactly. Yeah. That's right.
So yes.
Yes.
It's get creative and find ways to get deals done.
Excellent.
Let's talk about development.
Let's do it. So as mentioned, 3.5 hammers are going right now.
Under construction, 3.5 million square feet.
Yes, it is predicted that by spring starts, you'll be under construction with about 5.5 million feet that will be delivered, probably not through the punch list, but delivered in 2025. So 3.5 under, 5.5 delivered, 2025 into a market that is 8% vacant.
Correct, and I feel like that's a very manageable number.
If you take statistics, taking COVID out of it, your vacancy rate would go up a bit. Right, because you're absorbing.
But you're not
overbuilding.
You're not overbuilding at that number.
No.
I also, the other thing to note, I think on some of those projects that are being built are not secondary markets. They're really strong, good submarkets. That stuff has leased up quicker in those locations than some of the secondary markets.
With the exception of the one building in what I would call a secondary market, is they're building a very large building in Kelso, over 1 million feet.
Yep, that's the one to kind of keep an eye on for sure.
Yeah, I think that there's nothing else going on, I would say, between Frederickson and Portland in that size range.
That's what I mean. You got some Tacoma.
You only need one guy, and it's one building, right? So I don't think it's a bad move.
Yeah, and the rest of the stuff, it's you got Tacoma, you got Milton, you have Sumner. Those are
core
Maine
markets.
and Maine. Yeah. So, but yes, that will be interesting to see how that project does.
Yeah. I think the unique ones on either end of the development spectrum is that building in Kelso and then Trammell Crow's South Seattle building. Right?
Yeah.
They're both unique, whether it be location Kelso. Obviously, Seattle is a primary location, but it's a double-decker, right? So it's a unique building. So those are the two to watch. Who's going to take it? What's it going to look like?
Yep, exactly. And very different markets.
That's right.
So do you have a prediction on which one will lease first?
Trammell Crow.
Yeah.
Seattle. I think so. I think
so too. Yeah.
Yeah, I just think that building's going to lease.
Yeah, I think so too. Let's dive into a little bit the submarkets.
Yes.
And we're just going to go through this relatively quickly, but just kind of looking at from a quarter to quarter standpoint, South Seattle market went from 8% vacant to 9.4%. Kent Valley stayed about the same.
That pickleball didn't help him much.
Not yet. No, it's only 100 and whatever thousand feet. Kent Valley stayed about the same at 8%. Same with Pierce at 8.9. Thurston came down to 4.6%. It was at 5.5. So, overall, not including the north end and east side, vacancy rate went from 8.1 in Q3 to 8.3 in Q4.
Which is what we predicted. We thought, hey, it's going to go up, but it's going to go up at a very slow rate.
Yeah.
And I still think it's going to climb at about that rate, say 20 basis points over the first and second quarters. Based on development, based on current demand in the market, I think we're going to probably find that equilibrium, call it somewhere in the upper 8s before it starts falling down.
Yeah. And then looking at the current vacancy rate by size, okay?
This is an interesting one.
Yeah, it's interesting. So from 10 to 25,000 square feet, the current vacancy rate is 3.9%. 25,000 to 50,000 square feet, vacancy rate's 4.1%.
Going
Notice
up.
a trend here.
Yep.
The 50,000 to 100,000 square foot range, 7.2% vacant. The 100 to 200,000 square foot range, 9.4% vacant. 200,000 square feet and above, 10.9%. That gets you to about 8% overall. But what you see there is, we talked about this earlier, as you get bigger, your vacancy rate is climbing in every submarket.
Yes, I find that very interesting, right? But the thing that I find most interesting, and I think you'll agree, is if you take 10,000 to 50,000 and you average this, the vacancy is 4%.
Yeah.
Okay. It doesn't feel like
No, it doesn't. Yeah.
We have listings. We've seen other people's listings out there forever with not a lot of tours. So although it's 4%, it's a slow 4%.
Yeah, it is. There's more action right now, I feel like. So you look at the 50 to 90, 50 to 100,000 square foot range. That to me feels like the most active market.
I would agree. And then even the 1 to 200, we saw, as we noted earlier in the show here, a major reduction.
Yeah.
And we've got lots of tenants out there in that size range. So I would say number one size range, I don't know if I'd say one of those two are the number one size range. Statistically speaking, it would be 1 to 200, which is shocking to say.
Yeah.
But statistically, when you're looking at this, it doesn't lie. Numbers don't lie.
No.
And that is the only one that went down, and it went down substantially.
It did. Yeah, it sure did.
And then I would say outside of that, it is surprising to me how slow the bigger size range is, because that was the one size range that everything was leasing. And then this past 2-3 quarters, all of a sudden, some of those buildings are standing. Got the Nordstrom's building back, although being taken by DHL. And so that size range just seems sluggish for the first time in a long time.
Yep, agreed. So let's jump to, you want to jump to investments?
Yes. So investments, as we noted, 1,150,000 and change, a total of 58 deals. The largest deal was 83,100,000, which was Auburn Park 167, buildings A and B, purchased by Cabot, sold by TIAA.
Yep.
And then the biggest pounds per square foot at $453 was 5300 Denver, which sold from Torino to Georgetown Brewing, so a user deal.
Yeah, and then if you average out, kind of look at holistically everything. So 58 buildings traded, and this is above what do we go, 5 million or 10 million?
5 million.
Yeah, 58 buildings for, like we talked about, 1.15 billion at an average price per square foot of $230.
Yeah. That feels right.
Yeah. So that all is in line with where the market is today from an investment standpoint. We've already talked about kind of where the volume is from that standpoint and the demand.
And then largest move out on this report was Toy Smith at 262,000. They obviously relocated and then Crane backfilled it.
Yep.
When I read this, I was like, did Nordstrom's move in?
Ever into their building?
Yeah.
I don't think so.
Okay.
Yeah.
Because that was the only one that I went, wait a minute.
Yeah. I don't think they ever moved in.
So
I don't
they
think they ever had
moved in.
product in there.
I recall driving around Seaport a couple times and not seeing activity, but I didn't know for sure. I knew obviously they put it up for sublease, but I didn't know, was that a move out?
Right.
Yeah. Boy, I feel like that lease was done a while ago.
Yeah.
So they really never occupied.
Correct. Yeah.
Okay.
Yeah.
All right. So largest move out would be Toy Smith.
Yeah.
And then the port, we do have some good news. The port was up 12% last year.
Great.
Which is great over the year prior, obviously. So that was a great comeback, up about 324,000 TEUs. So good port activity. So, in recapping, Q4 was pretty good. I would say it only went up 20 basis points in vacancy.
Yeah.
We had great progress in the 1 to 200,000 square foot range. Positive absorption for 2024 was just under 1.2 million. Not a great year, but it was positive,
Humming along.
right?
Yeah.
So your predictions for 2025 is just a kind of a slow first 2 quarters.
I think that Q1 will be just relatively slow. I don't think there's going to see a ton of momentum on the leasing side. I do think like as we go quarter by quarter, the leasing momentum is going to pick up, and that we're going to have a better year from an absorption standpoint in 25 than we did in 24. I think we will on the investment side as well. More and more folks are coming out to play on those buildings. So yeah, all in all, I think I expect a better year in 25 from a leasing standpoint and an investment standpoint.
I would agree with both of those things. Yeah.
Thank you for listening. And Happy New Year to everybody. We're looking forward to a fantastic 2025.
Happy New Year.